Welcome to our new IFRS Educational Fund Series. It is an initiative of OJ Inspiration Limited. It is dedicated to providing complementary and supplementary education on International Financial Reporting Standards IFRS through a multiple choice question and answer approach. It is intended to make learning or intellectual assurance fun. In this session, we shall be considering 10 questions, to which the answers have been provided on IAS 12. This is a standard on statement of cash flows. Viewers or subscribers have 30 seconds to select or choose the answer to each question. Please enjoy it. Question number 1. For proper classification in the statement of cash flows, the acquisition of an entity through equity issued is presented as dash: A, operating activities; B, investing activities; C, financing activities; D, B or C; E, none of the options. The time counts. Ten seconds gone. Twenty seconds gone. Time up. The answer to question number 1 is E, none of the options. Paragraph 43 of IAS 7 provides, quote, investing and financing transactions that do not require the use of cash or cash equivalents shall be excluded from a statement of cash flows, end of quote. The acquisition of an entity through equity issue, as stated in the question, which is an investing activity, does not involve the use of cash or cash equivalents. Therefore, it is not included in a statement of cash flows. E is the answer to question number 1. Question number 2. Increase in cash flows from financing activities do not arise as a result of these: A, conversion of debt to equity; B, proceeds from issuing debentures; C, proceeds from issuing notes; D, proceeds from issuing mortgages; E, short-term borrowing. The time counts. Ten seconds gone. Twenty seconds gone. Time up. The answer to question number 2 is A, conversion of debt to equity. The basis for this answer remains paragraph 43 of IAS 7 as stated in response to question number 1. All other options in this question involve the inflows of cash or cash equivalents, but option A is not. A is the answer to question number 2. Question number 3. Which of the following is not a component of cash and cash equivalents? A, deposits with local banks; B, cash in transit; C, cash advance to staff; D, deposit with foreign banks; E, head office interest balance. The time counts. Ten seconds gone. Twenty seconds gone. Time up. The answer to question number 3 is C, cash advance to staff. In line with the definitions of cash and cash equivalents provided in paragraph 6 of IAS 7, all options as answers except cash advance to staff meet these definitions. Cash advance to staff may constitute advance payments for a purpose, or receivables, or loans, depending on the terms of the transaction. C is the answer to question number 3. Question number 4. For a property company that holds its acquired buildings for rental to others, and where the buildings are subsequently held for sale, cash paid to acquire such buildings is classified as dash. A, investing activities. B, financing activities. C, operating activities. D, investing activities and operating activities. E, financing activities and operating activities. Your time counts. Ten seconds gone. 20 seconds gone. Time up. The answer to question number 4 is C, operating activities. It is provided within paragraph 14 of IAS 7 that cash payments to manufacture or acquire assets held for rentals to others and subsequently held for sale are provided in paragraph 68A of IAS 16, property, plant, and equipment are cash flows from operating activities. C is the answer to question number 4. Question number 5. Cash advances and loans to customers by merchant banks are classified as dash. A, operating activities. B, financing activities. C, investing activities. D, financing and operating activities. E, investing and operating activities. The time counts. Twenty seconds gone. Time up. The answer to question number 5 is A, operating activities. Paragraph 15 of IAS 7 prescribes that cash advances and loans made by financial institutions are usually classified as operating activities since they relate to the main revenue producing activity of such entities, in this case, a merchant bank. A is the answer to question number 5. Question number 6. The equity interest bought by a stockbroking firm in an unquoted company is classified as part of dash. A, operating activities. B, investing activities. C, financing activities. D, investing and financing activities. E, operating and investing activities. Time counts. Ten seconds gone. Twenty seconds gone. Time up. The answer to question number 6 is B, investing activities. IAS 7's paragraph 6 defines investing activities as, quote, the acquisition and disposal of long-term assets and other investments not included in cash equivalents, end of quote. Equity interest bought or equity instrument investment in an entity whose shares are unquoted is not a highly liquid investment that is readily convertible to known amount of cash since it is not publicly tradable. B is the answer to question number 6. Question number 7. The effect of exchange rate changes in domiciliary accounts balance conversion can be treated as dash. A, investing activity. B, operating activity, C, financing activity, D, adjustment to cash and cash equivalents, E, non-recognized item. Time counts. Ten seconds gone. 20 seconds gone. Time up. The answer to question number 7 is D, adjustment to cash and cash equivalents. Paragraph 28 prescription from IAS 7 is that the effect of exchange rate changes on cash and cash equivalents held in a foreign currency is presented separately from cash flows from operating, investing, and financing activities. This is what the adjustment entails. D is the answer to question number 7. Question number 8. Proceeds from the disposal of non-current assets held for sale in line with IFRS 5 is classified as part of dash: A, investing activities, B, financing activities, C, operating activities, D, adjustment to cash and cash equivalent generated in the period, E, adjustment to cash or cash equivalents at start. The time counts. Ten seconds gone. Twenty seconds gone. Time up. The answer to question number 8 is A, investing activities. The paragraph 6 definition of investing activities of IAS 7 includes the disposal of long-term assets. Irrespective of the proceeds coming from the disposal of non-current assets held for sale in line with IFRS 5, they are investing activities as provided in paragraph 6 and as shown in examples of paragraph 16b, all of IAS 7. A is the answer to question number 8. Question number 9. A futures contract entered into by an entity to prevent exchange rate volatility on a letter of credit obligation is classified as dash in the statement of cash flows: A, financing activity, B, investing activity, C, operating activity, D, forex activity, E, hedging activity. The time counts. Ten seconds gone. 20 seconds gone. Time up. The answer to question number 9 is B, investing activities. Paragraph 16G of IAS 7 provides, among others, that cash payment for future contracts are investing activities, except where the contracts are held for dealing or trading purposes, or the payments are classified as financing activities. B is the answer to question number 9. Question number 10. Conary loans repaid by the staff of a company that is a non-financial institution are classified as dash: A, operating activities, B, financing activities, C, investing activities, D, operating and investing activities, E, operating and financing activities. The time counts. Ten seconds gone. 20 seconds gone. Time up. The answer to question number 10 is C, investing activities. The repayment by staff on constitutional loans given by a company that is not a financial institution falls within the definition and meaning of investing activities as provided in paragraph 6 of IAS 7. The further example provided by paragraph 16F of the same standard also affirms this. C is the answer to question number 10. That is all for this set. Thank you for joining us for the set 1 of IAS 7 Statement of Cash Flows. We invite you to subscribe to our channel, share our links, and invite those in your network to do the same. This will enable you and all other subscribers get direct notifications on future video uploads. We intend to cover all of the standards in this framework and create further sets of questions and answers on standards already covered. Thank you and bye for now.